I'm Jessica Minton for IBTimes TV, reporting from the New York Stock Exchange. Stocks were lower today after the latest round of mixed economic data. Jobless claims fell by the most in a year last week, but U.S. services sector data was less than stellar. We're going to be speaking with Joseph Greco from Meridian Equity Partners on his take on the latest round of data, as well as his predictions for the payrolls report being released tomorrow. Private sector data and new orders for factory goods were released recently. How do you think the slowdown in hiring and decline in factory goods will affect the market?
Well, clearly there's been a little bit of a concern that the economic recovery is starting to slow a little bit, and we may have even stalled out altogether. The Fed has come up to the plate and said, well, even though we thought we were doing well, we are prepared to, continue further easing if necessary, and the markets have reacted likewise, bouncing back and forth between we're not going to get any assistance, and the market pulls back down to the 1375, 1380 level, and we're going to get some assistance, and things are looking a little better, and we move back up to 1400, north of 1400 in the S&P.
And then in the Eurozone, they released unemployment data this week, and then on the other side of that in Asia, China released manufacturing data. What do you think plays a greater role in the U.S. markets?
I think people are a little bit more concerned right now about the China situation and really what's going on with their economy. Obviously, it's a very controlled economy. The government really does choose what is put out and how it is, put out there for us to digest. Unfortunately, a lot of our debt hangs in the balance, and a lot of our economy rests on, how strong their economy can continue to grow, if it can continue to grow, and if they can mobilize the people into a consuming nation as opposed to a very disparate population. The European unemployment is not a surprise. We know that the numbers are high double digits for most of the nations, and not only that, but not likely to change anytime soon. So I think that has kind of been something that we've already digested and has been priced in the market.
And then the ECB had their meeting today. They decided to keep their interest rates at their current level. What were your thoughts on the meeting?
Well, initially when they said 1% is going to stay, really not a surprise. Couldn't imagine that they were going to move it. A lot of people supposedly were anticipating an increase in the rate, which would have stimulated or simulated, intimated to the market that they were stimulating the economy to get going a little more. I don't really know where that anticipation came from. I actually, if anything, just expected flat to neutral, which is what it was. Then Draghi came out a little bit later and clarified some of that, and the comments he made were a little bit, Italo-centric, focused on Italy, in that commented on the situation there, his home nation, but also that if you're looking for assistance, I'm not going to give it, is basically what he said. And that was a little bit of concern, which is why I think the markets, are acting in a little fragile way, and we're starting to wonder again, is this going to be one of those back and forth in the summer where the European and world macro situation is the negative, push on the economy, while the U.S. economic situation, the U.S. equities situation is the pull up higher, because we really do have a good story, brewing here, and for the last few months the market's reacted very well to what's going on domestically.
And then the payrolls report is coming out tomorrow. What are your thoughts on that? What are your predictions?
We have such conflicting data when it comes to payroll. We had okay numbers on the jobless claims today, and then of course the revisions once again increased the number of jobless claims. Payroll, whether it's coming from ADP, whether it's coming directly out of Washington, or whether it's all fragmented from the business sectors, it seems to me that a lot of that is a very knee-jerk or results in a knee-jerk reaction in the market, but doesn't actually sustain. Most people take more of their cue from the bigger picture, developments, how the economy is doing, what the retail sales look like, because that's, small-time spending, and then, of course, auto sales, and then getting really big, mortgage applications and what's going on the housing front, and is that recovering, which does not look likely for this year.
After a week of mixed data, we still have one more report coming out, the payrolls report. And as Joe said, it's hard to predict what exactly is going to happen with the markets, but we're going to have to check out and see what happens tomorrow. Thanks for watching. I'm Jessica Minton for IBTimes TV.